Welcome back to Next Gen Investing. It's now time for FOMO. And today we are discussing Tesla, which unfortunately is making a move that might evoke that fear of missing out to the downside, as we are down over now just around 8% actually. Excuse me, I was about to say well over 8%. But joining us now to discuss more about some of these vehicle sales that we're seeing for the month of January is Caroline Woods, senior markets correspondent for the network. So Caroline, a blistering move, and for Tesla, I mean, I know we see volatility, but an 8% move is still an 8% move.
Certainly, and it's just building on a monthly loss. It's already pretty steep. Shares of Tesla are now down about 25% in February alone, about the same year to date, but 40%, almost 40% away from the highs. You know, the Mag 7 overall is up to a rough start in 2025, aside from Meta. But Tesla is by far the worst performer. A few things appear to be weighing on shares today, Jenny. One, there's some negative analyst commentary, which we can get to, but also what could really be weighing on shares are some data out of Europe that show plunging Tesla sales. According to the European Automobile Manufacturers Association, Tesla sold 9,945 cars in Europe and the UK in January. That's down more than 45% year over year. Overall battery EVs were up more than 30% year over year, sales of overall BEVs. Some of the biggest markets saw impressive growth in terms of those BEV sales, too. Germany saw 53.5% growth, Belgium saw 37.2% growth, and then the Netherlands saw 28.2% growth in January. So it's not that Europeans weren't buying EVs, it's that they weren't buying Teslas in January. And some of those competitors certainly seem to be chipping away at market share. Speaking of which, Tesla's market share did dip to 1% in Europe and the UK from 1.8%. Meanwhile, competitors like Volkswagen and China's SAIC Motor actually saw their sales increase in the month of January. Europe is Tesla's third largest market, but we also saw Tesla's second largest market, China, of course, post year-over-year sales decline in January as well. According to the China Passenger Car Association, sales in China fell about 11% in January. So certainly not good news when it comes to EV sales. Obviously, the bulls really cling on to the AI, the FSD, the full self-driving capabilities of Tesla much more than the actual EV sales. But when the AI trade is already under pressure this year, I think that, it seems like investors might focus on some of this negative news in terms of Tesla's core business as well, in terms of selling EVs. And it doesn't look very bright in Europe right now.
Yeah, no, it's super fascinating, Caroline, and I'm curious to hear your kind of final thoughts, but just to kind of throw in here as well, the Palantirs, the Metas, to kind of add other names, it does seem the names that had huge run-ups are kind of going full circle, since the election, and Tesla's certainly in that camp. It's got to be so frustrating for analysts, as really nothing's changed that dramatically in the picture of Tesla, but the stock price has gone from 300 to 500 to 300 in a couple months. That's not normal.
No, certainly not. I don't know if I would put Meta in there quite yet, because Meta's still up about 12% year to date. But, it's a good point. And I think that, there was so much optimism around Tesla shares following the election, and to really just see it come not quite down to where it was trading before the election, but as you can see here on the chart, it's not all that far off, is a pretty, extreme move. I think, something else to consider too here that I had mentioned could be weighing on shares today is some negative analyst commentary out of Guggenheim. There were reports yesterday from Bloomberg that Tesla was about to unveil some of the FSD features in China, which we of course said is the second biggest market. And a Guggenheim analyst actually reiterated a sell rating on Tesla shares and pointed to some basically weakness around that. Those features basically said that, Tesla doesn't have a leg to stand on compared to some of its Chinese rivals. The actual quote was that it's competing against its Chinese rivals with one hand tied behind its back. So points to the fact that training of FSD in China is being done with open source images and videos rather than its own proprietary data. Chinese EV makers don't have the same vehicle data restrictions that Tesla does, and they're also skeptical skeptical around the pricing ability of Tesla in China. So sticking with the sell rating there. And FSD, of course, those are similar features to what we already have here, but that's supposed to be kind of a bullish catalyst, according to the bulls from or surrounding Tesla. So I think that, when you take a look at the analyst breakdown, we always talk about how analysts are very split on Tesla. 43% have a buy rating, 32% have a hold rating, 25% have a sell rating. The median price target now, though, is 364, which is actually about 20% above where it's currently trading. So the majority of analysts don't see Tesla shares getting back to the highs, but do see it trading higher than where it is right now over the next 12 months. But it seems very much like the bulls continue to focus on, the bullishness around regulatory approvals around FSD here in the U.S. And that cheaper EV being unveiled later this year. But then the bears and those more in the neutral camp can focus more on some of the headwinds, which, there certainly are plenty, whether it's the annual sales decline that they saw, the first ever last year, the earnings miss back in Q4, the stiff Chinese competition, the pricing headwinds, uncertainty around the Trump administration, even if the approvals come, the potential rollback of some of those EV incentives. And, and I know we talked about this a couple weeks ago, but Stifel, who actually has a bullish rating on Tesla, talked about the low favorability ratings for Elon Musk and how their survey showed that Tesla's net favorability rating slid close to all-time lows, likely due to Musk's political involvement, and he's only gotten more involved since this survey came out. So there's certainly a lot to weigh here, and it seems very much like the bears are winning out when it comes to Tesla, at least so far in 2025.
I totally agree, and I think great summation of what we've seen in Tesla, frankly, as of late. I think there's been a lack of good news, and that's part of the narrative they control. I mean, Elon Musk may be too busy and hasn't been able to excite investors and shareholders that, frankly, are investing in Tesla. We're not necessarily trying to invest in Elon Musk, although it's basically, to me, synonymous at this point. But great insight, great breakdown, as always. Caroline Woods, Senior Markets Correspondent for the network.